saving money kind of sucks and is difficult to do. It's really about understanding the difference between what I call checkers finance and chess. If you want to play chess, you want to have as much income producing debt as possible. That income is able to service the debt and even have some left over for you to put in your pocket and actually enjoy your lifestyle.
Welcome to another episode of the Play Big Faster podcast. Got something really special for you. For those that are interested in learning about wealth and how the wealthy think about growing your wealth strategically versus the middle class, we have someone here who really wants to show us the difference between chess and checkers when putting together your wealth strategy. Freddie, welcome to the podcast and tell us a little bit more about what you do and how you help others develop a strategic wealth strategy.
Well, thanks for having me. This is great. And my name is Freddie Rappina. I own Opta Financial, which is a wealth building firm. We focus more on helping people actually build and not just saving money in the market, because that's only part of it and it's not the only thing. And let's face it, saving money kind of sucks and is difficult to do. It's really about understanding the difference between what I call checkers finance, which is more like saving into just into retirement accounts, having a good emergency fund. All these things are good if you want to play checkers. And if you're going to play checkers, I want you to play it well. I don't want you to be a bad checkers player because you'll get run over by capitalism. But I also want people to understand that it's not chess. And chess is more, what the wealthy do. And a lot of that has to do with how to use leverage correctly, how to build cash flowing assets, and not just saving money in the market all the time and hoping for a rate of return that will one day get you to a number where you can draw steady income from. I call that the golden wheelchair plan. It hasn't worked. It's not working. People dipping into their 401ks is up right now. There was just an article on it yesterday that came out. It's just not working. And there's 300,000 licensed financial advisors of some form or fashion in the United States. And if they were all given really great advice, in my opinion, the wealth gap in the United States would shrink. Instead, it's expanding. So something's not working, and it's time to relook at everything. That's why I wrote the book, Playing the Wealth Game.
So before we get into what the book has, let's talk about some of the basic building blocks for just building wealth. Because if you're someone who's working for an hourly wage and the wage may be under $15 per hour, you may have an entire family to support. How does the concept of building wealth apply to that person universally?
People in that situation, they need to, in my opinion, invest in themselves. Right? Saving money is not like just saving money, putting money in the bank or whatever. That's likely not going to work long term for the most part. Investing in themselves, investing in what is going to allow them to make more money, more income in the future, getting a better job, a better skill, maybe starting some kind of side business that can grow into something more substantial to get them out of that $15 an hour job, as you mentioned. I think that's more important than trying to put money into some kind of bank product that's going to be eaten up by inflation anyway. But that if they're in that spot, they have to develop a surplus. They have to figure out how to develop that surplus so they can start investing better.
For small business owners who are just looking to use certain levers to grow their business and also their personal net worth, we're trying to go from checkers to chess. What are some of the frameworks we'll find in your book that really give them the tools they need to be more successful?
One of the biggest things I'm seeing right now with small business owners, and this is going to sound really weird, is they're reinvesting too much into their business. Like the money's coming in and it's going out right back into the business. And a lot of them, they are the business. So if they stopped, the business would stop. And that's probably not the best ride to be on. Now, when you obtain these revenues, let's start thinking about, okay, how do we have retained earnings? How do we buy assets that are going to continue to develop income? And maybe that income can be reinvested into the business or a portion of it. So let's say you have, like, realtors are a good example, right? So they make good money, they have a good close or whatever. But then they're not buying properties for themselves. They're not buying rentals. And they're putting money back into their marketing for their next close, and this just keeps going and going. But if they run into a dry spell, there's no assets creating income separate from them to be able to support their lifestyle. So if you are a small business owner, really you need to start thinking about, okay, how do I make sure that, yeah, I made this revenue, this is great. How do I create streams of income that are going to be continuous regardless of the market conditions of my own business?
The strategic debt approach that you're talking about for solopreneurs, what does that look like when you may have someone as, individual who may be heavily invested in the stock market and it almost seems counterintuitive not to reinvest into the business? But like some of the strategies that you would maybe advise them to incrementally use, because it's like this, you can have a toolbox with tools, but which one do you take out first and focus on?
Okay, so once they get a really good foothold, and this is not for everybody, this is just very general information. Once they have a good foothold, once they're investing in the market, they have their good business going on, start investing in rental real estate using props, using good leverage. This is income producing debt, which is, in my opinion, is the biggest separator between a checkers player and a chess player, and using that borrow money to purchase cash flowing assets such as rental real estate, such as maybe other businesses that they're not materially participating in, and using the income from those assets to perhaps reinvest into their business. That's fine because that stream is not going to stop when things inevitably go sideways in any business. So it's just thinking about it from that perspective instead of, hey, I'm gonna take a bigger risk in my business with this great revenue that I've made. How about we pump the brake first? How about we create a revenue stream that you can still invest some money, but you can also, if it doesn't work out, all the money's not lost. It's still sitting in the rental property, still sitting in the business. It's still sitting in the market based assets and continuing to grow for you. I like people betting on themselves, but let's bet on ourselves with money that we're not. It's not going to go poof tomorrow.
Yeah, and I love that. What you're describing sounds like almost a debt-free business model where you're taking the asset and the asset's covering expenses and so forth. One thing that I see a lot with entrepreneurs, solopreneurs, and small business owners is that they are not planning for tomorrow. May not be a traditional retirement vehicle in place for when the business, is an exit. Maybe if there's a dissolution of the business, there's just not a plan B. What sort of strategies would you recommend business owners or entrepreneurs on how to really get a plan B for retirement?
Yeah, the plans are available for small business owners. So you can still have all the retirement accounts. You can have 401ks. You can have good, just the same thing as the big corporations have. It's more of the mindset, right? It's more of the mindset of how am I going to build wealth for myself? Is my business eventually going to stop? What is my actual business valuation? Am I able to sell this later on? And it's okay if the answer is no, but if the answer is no, you need to build assets that are going to live on in perpetuity after you are done with your business to continue that income, because the income is going to stop at some point. It's almost like you're a professional athlete. You got a few years to make a lot of money, but then you got to make sure the money lasts after those big checks stop. It's really about developing pretty similar strategies, but it's a mindset really more than anything else. And just if you're doing what everybody else is doing, you're going to have the same results other people are having. So if that's the result you continue doing that. But if it's not, please stop listening to just the regular run of the mill stuff, because it is clearly not working in the market.
So, Freddie, as a business owner, how do I know when I need a Freddie in my life? What point in my business do I need to look and see if there's someone like you or even you that can help me grow to that next level?
Yeah, once you start obtaining revenue, once you start like really getting your foothold, you at first everybody's like really focused on their business. I remember all those sleepless nights myself. I get it. I was there. But once you start obtaining the revenue, that's when you should have somebody that's going to be looking out for you and just give you the suggestions and seeing which game do you want to play. And like I said, there's nothing wrong with playing checkers. Just don't expect to be able to obtain the type of lifestyle that chess players are able to obtain. And that doesn't mean you can't play chess poorly. You can, but it's a totally different way, and they fly in the face of each other, which is really weird. If you want to play checkers, you want to be out of debt, no debt, right? You want to play checkers, don't have debt. If you want to play chess, you want to have as much debt as possible. But when I'm using debt in this context, income producing debt, not like consumer debt, like running up your credit card or anything like that. Buying assets that are going to create income, that income is able to service the debt and even have some left over for you to put in your pocket and actually enjoy your lifestyle.
Anyone who listens to the podcast on a regular basis, they know that I'm a huge fan of baby steps. For the small business owner who may not be as familiar with some of the terms, the concepts, they just have a widget that they know how to sell. And this whole talk about wealth is brand new to them. What are some of the habits that they can start working on now to develop that mindset?
Start learning the two different mindsets, but don't begrudge one of them. Don't Some people need to play checkers well before they can even move over to chess, and that might be needed and might be a great place for them to start. What I strongly suggest is people don't think that checkers is chess, though. That's the difference, right? But if you're starting out and you need to get this foothold and you need to get yourself ready, it's building that foundation, building that launch pad for yourself. This way, if you wanted to, you could start implementing other strategies. But if you once you go to that side, it's almost like you have to unlearn the same strategies you were implementing when you were playing checkers.
The concepts that we're talking about, I know they're universal concepts, but they also are subject to market conditions. What market conditions should business owners just look at when they are strategically and intentionally trying to build wealth that will help them determine when's the right time to take on some of this good debt?
You're talking about just regular market conditions, correct? Like interest rates and all that kind of stuff. Yeah. There's no good time, there's no bad time. There's times when it's a little bit easier than others for sure, but there's no good time, there's no bad times, like getting married or having kids. There's no good time, there's no bad time. You just start and you figure it out as you go. But yeah, I would say when people are ready, like I said, it's a big mindset shift once they start realizing that, hey, I can build wealth. I can do this. This isn't just for whatever profile that you have in your head of somebody that's super duper wealthy. No, it's available for everyone. It's just you may have to do different things. You may have to do things you're not comfortable doing. Got to be comfortable being uncomfortable sometimes, and do some things that may be a little bit scary, but also you got to do it from a position of strength. We're not just throwing the ball completely downfield all the time, right? You want to do it from a position of some strength, not weakness.
As an entrepreneur, sometimes you have to phase in staff or fractional employees to really help you grow the business. How would you describe what you do that's different than what a tax planner does in terms of helping people to strategically grow wealth and to like really build a moat around their business?
Well, there's a difference between tax planning and doing taxes. So tax planners are going to people that are actively doing tax planning are going to help somebody figure out different ways to lower their taxable income legally. People that do taxes, it's kind of like just bringing that shoebox to the tax professional and tax professional doing the taxes and then telling you what you owe or don't owe, right? But there's no active involvement throughout the year to help somebody get the taxes to get their taxable income lower. And taxes are a big part of wealth building, in my opinion, probably one of the biggest. If once you've mastered that, it's real easy to advance a lifestyle because it might sound crazy, but the tax code is set up for people to not pay a lot of taxes. How you earn the income, what are you doing with the money you're investing? Because if you invest the money the way the government wants you to invest money, they don't tax you very hard. But it's a free country. If you don't invest money the way the government wants you to invest, then you're taxed very heavily. So just understanding the different rules, even if you understand it from a 30,000 foot overview, is better than just throwing your hands up and saying, "Oh, well, I'm going to pay taxes no matter what." Or you don't have to. You just you have to do it legally, and you have to do what the government wants you to do.
When we first opened, we talked a little bit about the book, or we mentioned the book.
Hmm?
Tell us about what we can expect and how we can find the book.
I wanted to write a book that was almost like a self-discovery book. It's by the end of the book, I want people to understand and know whether they are a chess player, whether they are a checkers player, and whether or not they want to switch. But by the end of the book, people should not be screaming at the moon, why do the rich keep getting richer and the poor not? It's really that introduction into the two mindsets, the two games. And that's what I want most out of people reading the book, is they understand that there are two games. And there's almost like this paternalistic element to the whole financial world, right? Where there's a lot of selling of checkers by corporations, by investment companies, by insurance companies. And then they're turning around and playing chess with the money and growing very well for themselves. And there's no slight against one company or one industry or whatever. It's just like this whole system. And I want people to at least recognize that and say, okay, I'm either going to do that or I'm going to do something different. But once they're finished the book, they should understand who they are and what they want. And we enjoy working with people that want to play chess, that want to build that generational income, that good lifestyle for themselves. And that can be different for everybody, right? What that means is usually pretty different. But if you're, like I said before, if you're going to just follow what everybody else is doing, it's not, and the wealth gap is going completely separating very rapidly, just don't expect to have different results.
Here's the thing that everybody wants to know, because you've given us so much great information in this episode. If you had just one piece of advice that you can share with entrepreneurs on how to play big faster with the wealth game, what would it be?
I would say, hey, look around you. Like just look around. Is it working? I'm a retired police officer and I have an evidence-based mindset. And when I see things that are clearly not working, I just pump the brakes and say, okay, I understand what you're telling me to do, but is it working? And that goes with everything, right? Even so, I want people to understand, like, okay, what are the successful businesses doing? And can you do that on perhaps a smaller scale? What are the successful wealth builders doing? And can you do that on perhaps a smaller scale and build your way up? So this whole idea of scale, I think, is very important for people, because not everybody starts out the same place, but just believing that you can put money in the market and it's going to bring you to some promised land, that's likely not going to happen. And that comes from the person who is putting people's money into the market and makes a living doing that. But just that by itself, in my opinion, will not do it.
Freddie, thank you so much for joining us. For those listeners who would like to take this conversation offline, what is the best way to contact you?
Best way to contact us is going to our website, optafinancial.com. That's optafinancial.com. And it's scheduling a complimentary consultation. And we just go over goals and make sure that people are a good fit for us and we're going to be a good fit for them, and see if the relationship's going to go further than that. And of course, reading or listening to the book Playing the Wealth Game. It's on Amazon and Barnes & Nobles or wherever you get books now. And just challenge yourself to think a little bit differently than what the considered norm is, because the norm isn't working, in my opinion.
Freddie, thank you for being with us.
Thank you for having me.
And everyone, until next time, play big faster.
Thanks for listening to this episode of the Play Big Faster podcast. Want more entrepreneurial content?
I like this.
Make sure to subscribe for future episodes.
Already subscribed.
I just clicked on it.
Don't forget to like and leave a review. Share with a friend that needs this in their life.
I think you need this more than I.
Oh, and make sure to follow Scherrie on IG at Scherrie Speaks. And remember to play big faster.